Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 5th of February. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, growing fears over how AI could upend business models, rips through global markets for a third day in a $1 trillion tech sell-off.
UK Prime Minister Keir Starmer is forced to climb down and release documents relating to his appointment of Peter Mandelson as US ambassador.
Plus, how a group of puzzle-loving mathletes in Prague are using sci-fi inspired trading to dominate Europe's most volatile power market.
Let's start with a roundup of our top stories.
AI's potential to change business models, large and small, is driving a $1 trillion sell-off in stocks and bonds and loans of companies. The rout was first sparked by Anthropic's release of a new tool for legal work earlier this week. The move ignited fears across markets that AI leaders will overtake established industry players in innovation sooner rather than later. And in a confusing mix of market signals, even companies long seen as the prime beneficiaries of the AI boom are showing signs of fatigue. In its latest earnings report, Alphabet topped projections for quarterly revenue, but said capital spending on AI will be significantly higher than anticipated. CEO Sundar Pichai says the money will deliver a return on investment.
Revenue from AI solutions built by our partners increased nearly 300% year over year. And commitments from our top 15 software partners grew more than 16x year over year.
Sundar Pichai, speaking there as the Google parent, said that capital expenditure could come close to $185 billion this year, compared with just under $120 billion that analysts had expected. Alphabet shares fluctuated in extended trading following the report.
The price of silver has plunged by as much as 17% today after a two-day Silver prices hit an all-time high in late January of more than $120 an ounce. Since then, though, silver has lost more than a third of its value and is trading at around $75. The precious metal rally last month was driven by speculative leveraged bets, geopolitical upheaval and concerns over Fed independence.
In the UK, Keir Starmer's position is in doubt following the scrutiny of the appointment of Peter Mandelson as UK ambassador to the US and his relationship with Jeffrey Epstein. The Prime Minister is facing backlash from his own party members after he struggled to answer questions from opposition leader Kemi Badenoch about his knowledge of Epstein and Mandelson's relationship. Speaking in Parliament yesterday, Starmer maintained he was not warned of the extent of wrongdoing.
Mandelson betrayed our country, our parliament and my party. Mr. Speaker, he lied repeatedly to my team when asked about his relationship with Epstein before and during his tenure as ambassador.
Keir Starmer speaking during Prime Minister's questions, where he was forced to acknowledge that the material used to vet Mandelson did contain details of Mandelson's dealings with Epstein. MPs voted to release all documents related to Mandelson's appointment as an ambassador. They'll be reviewed by the Cross-Party Intelligence and Security Committee.
Now, the Bank of England is widely expected to leave interest rates on hold today as it waits for more evidence that inflation is under control. Bloomberg's Ewan Potts has a preview.
Just one of 32 economists in Bloomberg's survey expects a rate cut today. The overwhelming consensus is that the UK's base rate will remain unchanged at 3.75%. Ahead of the 12 p.m. announcement, rate setters will be weighing the contradictory problems of above-target inflation and growing concerns about the labour market, with unemployment now above 5%. But on productivity, there could finally be some good news. Speaking to Bloomberg, some analysts say that headline productivity estimates may be masking a recent resurgence driven by the adoption of artificial intelligence. One economist from UBS Wealth Management saying the UK and global economy are likely in better shape than the media would have us believe. In London, I'm Ewan Potts, Bloomberg Radio.
The European Central Bank is also likely to keep interest rates on hold for a fifth consecutive meeting. That's despite geopolitical tensions and a stronger euro. All economists surveyed by Bloomberg expect the deposit rate to be kept at 2% at today's meeting. Investors and analysts see rates staying there until the end of next year, with the chances of a hike in 2026 receding.
Now we've got some breaking news this hour. BNP Paribas has reported unexpectedly high fourth quarter profit and raised some mid-term financial targets. So the French lender achieved net income of 2.97 billion euros in the 3 months through to December. The firm's also raised its target for profitability for 2028. Meanwhile, the Spanish lender BBVA has reported fourth quarter profits of just over 2.5 billion euros, broadly in line with estimates. Net interest income came in at over 7 billion euros, with some 200 million euros ahead of expectations. BBVA's shares have doubled over the last 12 months.
The biggest US lenders are pushing the European Union to loosen its cap on banker bonuses. Their lobbying comes as the EU considers a wider set of reforms to boost competitiveness. Bloomberg's Tiwa Adebayo has the story.
The EU is accelerating a planned review of its banking rulebook after pressure from member states. And for the sector's biggest names, there's one item that's top of the agenda. The likes of Goldman Sachs and JP Morgan are pushing for a loosening of banker bonus rules, which currently cap payments at twice fixed salaries. But whilst the Association for Financial Markets in Europe has put the issue on its wish list of reforms, there is some pushback. Bloomberg understands that insiders feel the change could come at the expense of other measures like simplifying capital structure and reducing daily regulatory burdens. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Looking at the markets, the tech sell-off continues in Asia. The MSCI Asia Pacific Index is down by 1.3%. Gold and silver continue to decline. Gold is down by 1.2% this morning. You've also got copper down today on the LME. Bitcoin falling to a 10-month low in Asia trading. Looking at stock futures for Europe, we're also expecting a lower open here. We're down by 0.2%. The Bloomberg Dollar Spot Index is slightly firmer. The pound and the euro are both lower this morning ahead of central bank rate decisions. Those are the markets.
In a moment, more on the continuing tech sell-off that's been deepening over AI disruption fears, plus how a Czech trading firm took inspiration from science fiction to dominate Europe's most volatile power market. But another story that caught our eye and a lot of attention this morning as well in the UK, the bruising Prime Minister's questions for Keir Starmer yesterday.
Yeah, absolutely. MPs have voted for the government here in Britain to disclose all the documents relating to Peter Mandelson and his appointment as US ambassador. So Keir Starmer had wanted to keep those documents confidential, arguing that there were issues of national security. But instead, they will now go to this parliamentary cross-party committee for review and then presumably release. It's a major defeat for Keir Starmer, and that is the point. It shows the depth of anger of his own MPs, really, about this whole issue that has arisen because of Jeffrey Epstein and all of those files that were released. It could perhaps eventually precipitate a leadership challenge. We don't know, because it shows really, or could show, how much was known about Mandelson's relationship with Epstein, or maybe more details before the decision was made to appoint him as the UK's ambassador. So there was a really dramatic moment yesterday in Parliament when Kemi Badenoch was asking the Prime Minister whether the official secret vetting for Mandelson mentioned this ongoing relationship with Epstein, and the Prime Minister replied at one point, yes, to stunned MPs. He then went on to say that Mandelson, though, didn't tell the truth when he was questioned.
Yeah, look, it's a huge political story in the UK, and I've been interested to read what Matthew Brooker's been writing about this for Bloomberg Opinion, thinking about what the bigger picture might be actually for the future of the House of Lords. Will this finally prompt the long discussed reform of how Lords are appointed and vetted? Of course, the vetting now very much in focus for Peter Mandelson as well, and whether or not this might see Labour deliver on some of what it's promised in its manifesto of being big changes for the upper house. I mean, Matthew Brooker's point, seems to be much easier to sack a prince than a lord at the moment as well. He makes quite a good argument for how this could be done as well, and says that, look, if you have an upper house that's unelected, you need to have confidence in the people who are in it, and if you don't have this sort of confidence, then that's going to cause bigger questions about the function and the value of the House of Lords.
Yeah, and I was really interested in his point that Canada has an upper house that's based on the UK's, but it's got this independent body that picks people to go into that upper house. And he was saying, look, why isn't that a model? I thought that it was a really interesting point, and we'll put a link to that story in our podcast show notes for you.
Well, let's get into the big market moving story. That sell-off continuing for a third day today, inspired by these fears over AI on the verge of upending business models for a wide range of companies. We've now seen $1 trillion wiped off software stocks as a result of this. Matt Bloxham, senior analyst with Bloomberg Intelligence, joins us now for more. Matt, there have been many AI-driven sell-offs since ChatGPT went mainstream. Is this the most significant one so far?
I think it is, without question. Obviously, probably one of the other noteworthy ones that comes to mind is when, we heard about DeepSeek, which kind of really shook up the industry. But yeah, I think the both the breadth and depth of this sell-off and the speed of it has just been quite breathtaking, really.
The DeepSeek moment, was that because it was China versus the US? That was the issue there, wasn't it? And then it leads to the question about whether the current sell-off is an overreaction or not.
Yeah, I think part of it was China-US, but actually part of that DeepSeek moment was actually quite similar, I think, to what we're seeing now. Essentially, the DeepSeek model purported to do what the developed US market large language models were doing, but massively reduced cost.
Cheaper.
Yeah, exactly. Hugely cheaper. And this was like, wow, we thought this was the new model. And actually, maybe this is the new model over here. And I think that's exactly what's happening here, is that, even kind of new generation software companies are potentially going to be usurped by these AI-developed AI tools, and that's really essentially what Anthropic has done. It said, okay, we started with Claude Code. Claude's their large language model, and Claude Code helps software developers to completely reimagine how they develop software for new programs, and that kind of evolved into Claude Cowork, which actually now is an incredibly interesting and powerful add-on to Excel, the most popular bit of productivity software in the world, and has usurped Microsoft's own Copilot potentially in that platform, and now that's extended into the kind of legal tool, seemingly needing almost, very, very kind of little human intervention to develop this code, and providing a very powerful tool. I think that's kind of what's kind of really made people kind of, step back and rethink, wow, we thought we had this figured out and maybe we don't. And the answer to that in the short term, as it often is with markets, is let's just sell everything and think about it, and then step back in once we have a new view about what the future is, and pick our new winners once we've got that figured out.
This time around, it's software stocks that are very much in focus, but are there other sectors that could be vulnerable to this sort of investor pressure over AI in the future?
Yeah, exactly. And obviously, software's been the focus, but it has hit other industries. One notable one has been the big advertising agencies. So if we look back to Tuesday, Publicis, which is one of the biggest and most successful ad agencies, they've made a massive pivot towards technology and AI. So we're perceived to be leading this transition and managing it really well. They reported really good results, an encouraging outlook. The whole ad agency group sell off 8 to 10% that day, and have had further declines still, because they are also perceived as an industry that could be completely disrupted by AI. And I think this whole kind of Anthropic moment has again led to kind of incremental concerns that these businesses, yes, we knew or exposed to it, but that seemed to be managing that transition in a good way. Actually, we need to go back and rethink that. So I think anything that's kind of like a services-based industry, from ad agencies, legal, accounting, consulting, financial advisory, all these kind of human intensive service-based industries are potentially not going to be untouched by this.
Yes, it's sort of an incredible moment. Is it going to be a transition with AI or just a rupture? I think investors are really kind of contemplating this. Matt, thank you so much for your time today. Matt Bloxham is Bloomberg's senior analyst with Bloomberg Intelligence. Thank you for your time. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, a Czech trading firm has come from nowhere to dominate Europe's most volatile power market. The trio behind Second Foundation took inspiration from science fiction, hiring maths prodigies from across Eastern Europe. Our energy reporter Eva Brandel joins us now for more. Eva, good morning. Great to have you with us. How has Second Foundation become such an important player?
So the company operates on the ultra short-term market, and to be successful in this, you have to use algorithmic trading, and this is what they seem to be very good at. They have built very sophisticated algorithms that can react to the market in milliseconds, and to get good at this sort of trading is the main strategy is to have very smart employees who constantly can improve those algorithms. And so they hire a lot of smart traders with a special love for solving math riddles. And they even say they have the most math Olympic medalists in Eastern Europe.
Wow. Okay. So maths prodigies then are working for this company. Well, then tell us a bit more about the intraday power market that they operate in, that Second Foundation operates in, and why it's such a lucrative space actually to use all these people in.
So the intraday power market has undergone a big change in recent years, and this has to do with the energy transition, because as more renewables came into the system, more volatility came to the market. And nowadays it's pretty hard to predict how windy it will be or how much sun will shine that day. Prices can hugely swing. And on very windy, sunny days, obviously prices will go negative, or prices can also jump very high, up to €1,000 per megawatt hour when demand is high and it is also windless. And this increased volatility has made the market much more attractive for algorithmic traders who can react faster than anyone else.
Now, the co-founders are fans of science fiction. How has that influenced their business?
So first of all, the company is named after Second Foundation, the third book in Isaac Asimov's Foundation series. And every new employee gets a copy of that book. And also they have other things named after science fiction books. So their trading platform is called Sophom, named after a supercomputer in the three-body problem. And also when you visit their company's Prague office, all of their walls are lined with bookshelves, and you can guess what's in there, even more science fiction books.
Okay. So then what's next for the company?
The company now expands their battery business across Europe, and they might at some point even expand beyond energy. So they share with me that they might go into equity trading next.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.